Hi, welcome to the video day. It's the 23rd of August from Wednesday. In today's video, we're going to look at trend following big trends. We'll be looking at the outlook for the USD against European currencies. Now, the pairs we're going to be checking out are going to be Euro USD, GBP USD, then the USD against three Euro correlated currencies: NOK, Norwegian krona, SEK, Swedish krona, and finally PLN, Polish zloty. We'll go to the charts in just a moment. Now, over the last month, we've done a couple of videos in terms of buying the USD. Now, the USD has had a really great move to the upside, but probably still has more strength ahead. Now, you might get a pullback in the short term against USD, but that pullback will be a buying opportunity. Now, in terms of the European currencies, speculators remain too bullish despite bearish fundamentals, which points to more dollar strength. I'll go through the logic of our long view in a moment and all the key technical levels. But just before we go to the charts, if you want to join our member centre, get live access, you can check out our course and our daily technical sentiment analysis of 14 FX pairs. You can get live membership, link beneath the video. You can also join our free educational mailing list, follow us on Facebook, and finally join our Facebook group of traders. Right, let's go and take a look at the opportunities. Right, we're on GBP USD. For anyone who missed our two previous videos, when we came up here strongly, you can see the big rally above 131. Speculators built up their biggest long position since 2014, and we expected a breakdown, which came. Then we got stopped out on that tail there, came back in through the bodies, and was still short. So you've seen about 500 pips of downside. There is far more to come. In our view, speculators just remain too bullish of the pound. I'm going to draw my levels of entry, stop and target in a moment, but I want to look at speculative positioning. Now, again, for anyone new to our videos, this is the COT Net Traders positions, which are our favourite sentiment tool. I've done a video explaining how we use them in detail, but just in brief, we're looking at commercials in red. They're hedgers. They are smart money at turning points, okay? Then you've got large speculators. They could be right about big long-term trends. They always get caught badly at big turning points, okay? Now, in terms, we're not interested in every twist and turn on the report. We want big divergence, okay? You can see here that speculators build up a really big long position. It's the biggest since 2014. We double top and then we move to the downside. Now, speculators do drop off their long position a bit, but last week they built back up again. Commercials are mirroring the speculators in the opposite direction. This position is still way too big and points to more pound downside. Now, in terms of the next COT Net Traders positions, they'll be out Friday after the market close, so I'm going to do a weekly update at the weekend so we can take another look at these pairs and others, okay? Now, in terms of being the largest spec position since 2014, it's a really good chart. Just shows speculators, not commercials. You can see here, when you get the big spec long, look at that for a fall. It's a really long-term chart. This chart was posted before the pound fell, so obviously the pound was going up above 131. We've seen some downside, but plenty more to come, okay? We're going to go through why speculators are so bullish in a moment and why we think they're going to exit on stop, okay? Or more will exit on stop. Now, right, in terms of the euro, right, Euro USD, speculators tended to favour the long position over the last year or so. Like I said, we're not interested in every twist and turn, just in weeks when they really build up their long positions. I've isolated the two biggest longs on the chart, one here, and you see a decent fall in the euro. Another one here, euro tops out, goes lower. Commercials are obviously going against specs. So we're looking for more speculators to get taken out on stop and eventually for them to flick short of the euro and GBP. Okay, so there could be plenty more downside in these pairs. Now, in terms of why are speculators so bullish, I just want to go through their logic, which we believe is wrong, and why you're going to see more speculators come out and stop, and hopefully from our point of view they reverse their positions. Let's just go through some charts very quickly. Right, like I said, just a quick few charts. I'll put some more information on my blog in terms of why we're so bearish of the euro and GBP, and put a link beneath the video. But what's the market expecting? The market is expecting both the Eurozone and the UK to avoid recession. We think odds of a recession are high, okay? Now the market also sees possibly the ECB and the Bank of England raising rates. If they do, that's in the price. We think they'll want to avoid that because the economies are not doing well. And this is a good example here. I'm just going to show you some GDP data. This is for Eurozone. You can see gross domestic product is coming down. It's barely in expansion. That is going to go negative in the next quarter, okay? What about the UK? No growth at all. That's probably going to go negative in the next quarter. What about on the other side, the USD or the US economy? Okay, it's not doing brilliant, but it's doing 2.4%. That's a lot better, obviously, than the UK. And Eurozone has got a really robust economy. You can see going forward, this is activity data. Yeah, how much it surprises to the upside or downside. Euro data, UK data surprising the downside, US data to the upside, okay? And I'll just show you some data from today. And it both miss forecasts. This is a leading indicator. It tells you where GDP may go in the future. It's PMIs, okay? You can see Eurozone PMIs come down below 50. And look, this month's data here came out today, dreadful, below forecasts. Forecasters were surprised. It's no surprise, okay, in our view. What about the UK? Held above 50 last month, below 50 this month. Basically, yeah, both economies going into recession. There's more info and a lot more charts on my blog, so just click to read. But now we are going to go and do the technical level. So we're going to start with GBP USD. All right, just on the first chart, GBP USD, I'm using the chart I drew in our member centre earlier today. Now, in terms for anyone new watching our videos, we've already got a bias from the big fundamentals and sentiment beforehand, so we're going to keep our technicals very, very simple. It's just big levels, support and resistance, look at volatility via Bollinger Bands, and we also look at momentum as well. Now, in terms of GBP USD, decent fall, but look, we're kind of trapped in a channel, and we're trapped between 128 resistance and 127 support. This was this morning. I'll show the updated chart in a moment. Now, in our view, we felt or feel that we could get stopped out above 128. Okay, so we're in at 129.20. We'll put a stop at 128.30. Okay, so we're not going to make much if we get stopped out. It's just going to be 90 pips. However, if we're stopped out, we would just sell back through. Resistance would obviously become support. Sell back through 128 with a stop back behind the next round number 129. The COT divergence points to moves to 124, then 122. So basically well over 500 pips on the downside. But just this sideways action was making us cautious this morning. What has happened this evening? So in terms of price action, I think I said it in my intro, we'll only look twice a day unless there's major news events. Once London open, and then not obviously, but into New York close. Now you can see what has happened here. We've come through the 127 level, and now we've exhausted back, okay? So we're above 127 at this moment in time. I'm going to do my PM update in a moment or in an hour or so. If we're still holding 127, what I will do, and I'd recommend traders do this with any pair they trade, always have two trades on, okay? Because then you can bank one out. So take off half my trade, 127.20. I've got basically a couple of hundred pips. I've still got one in, and then I can resell again through the 127 level. Now, in terms of the markets, major event of the week is going to be Jackson Hole. Chairman Powell and many other central bankers will be speaking. So, we are getting a little bit of nervousness and position squaring into that meeting. Now, in terms of Jackson Hole, I'll post another article on my blog on Friday morning, okay, updating the pairs we're going to look at today. But I don't really like the look of that exhaustion back, but I want to stay with my view, half off. We'll leave the other half in, stop behind 128. If we're taken out, we'll then come back in with a full size position back through 127.80. Right, what's the next pair? Right, Euro USD. Now, in terms of Euro USD, again, we've had two trades in this one. Just for new viewers, up here, we were looking for the euro to top out. Down she comes. Then we got spiked out as we had this big red. Now, we just basically sold back through the bodies and we've moved lower, about 250 pips better off at the moment. And if we get stopped out, basically we get 150. Now, in terms of this one, what is the price action tonight? You got a little bit of a rally in the euro exhausting back. On this one, I'm not going to take in 50% of our position tonight. Maybe I'll do it in tomorrow's daily update, but I just think that is just a normal correction. So we're going to stay with our position. Now, in terms of our stop is here, okay? If we go above 109 and then we're stopped out, you can see what we're going to do. We're going to go 108.90 and then put our stop at 110.30. So if we go through the round number and take our stop, we'll look to sell back through it. There's always big order flow around round numbers. So come back in through 109, stop 110.30. I haven't drawn the level in, but it's here. You can see these bodies that I'm highlighting. Also, it's a round number as well. If we would go at 109.80, I'd just sell into that. Go 111.30. I think, in terms of speculative positions in both the pound and the euro, I just think point to lower prices. You can always get, obviously, moves against you. Jackson Hole was a big event. I do not expect Fed Chairman Powell to take a dovish stance on interest rates, but you never know. So we're using good stock protection in our view. And if we go higher, we can, in inverted commas, get in at a better price. But this could easily go down to the 1,000 level or par level. But 105.50, we'll see if we get there first. But very bearish of the euro. We're also extremely bearish of the correlated currencies, and they've moved in a much more volatile way than euro USD. Proxies very often do. Obviously, the euro's weak, it'll push the proxies or correlated currencies down as well. And there's one that really interests me, or the one that interests me the most, I'm going to do it first, is USD PLN. Right, USD PLN. Now, in terms of this one, I've been kind of bullish of this for a few months. Last year, it was our top performing pair. This year, no. I decided to come in quite heavy here, came up, then gets stopped out. She comes down, had a big position there, got stopped out. Tied up a reasonable amount of money as well as not making anything. But down here, this is big monthly resistance. We came in heavy and we're on our third trade now. We've moved really nicely to the upside. Now, just based upon the economic fundamentals, 435 then 445 are on the cards, okay? Now, in terms of this pair, I put an article on my blog going through the fundamentals, okay? They're not good for Poland. There's event risk as well. What are we doing tonight? Basically, we're coming back a bit. No big actions, just basically the euro's a bit stronger, so that's helped the zloty. So I'm not going to change my position tonight. I may do so tomorrow. Maybe we'll take half out and go through 415, or if we went through 410 and our stop was hit, we come back through 410, stop back behind 405. But yeah, it's an okay uptrend, plenty of upside. Now if we get to 445, obviously we've got to get there. Let's say you did buy a breakout above 415, stop behind 410. What's the risk to reward? It's 6 to 1, isn't it? Okay. Obviously our view's got to come to fruition, but that's where we believe the economic fundamentals point to the USD going. But there's a big problem looming for the zloty. I'm going to go to the weekly chart. Now, in terms of here, I've just done it as percentages, okay? So basically coming up on the weekly chart, if we get up to 445, that's 11.25%. That's with no leverage. Then I've got an additional run on and maybe 12.4% more. So it'd be well over 20%. This is on Russia-Ukraine war escalation. Now I said, yeah, our biggest winner last year was the Polish zlotys. We anticipated Russia invading Ukraine, and you did see a big move up, but we're well below pre-war levels at the moment. Now I do feel it's possible that Poland could actually intervene outside of NATO into the Russia-Ukraine war with troops. If that happens, the zloty will take a really big hit. Okay, the logic is in the article. I can't explain it here, not enough time. You can read the article and see what you think. Now I think it's possible, but the probability I think would probably be quite low, but it is possible. Okay, even without Russia-Ukraine war escalation, 11.25% with no leverage. Obviously, it's got to get to our target, would be a good result. Okay, so that's the USD PLN. Now we're going to switch to the Nordics. I want to look first of all at USD SEK, which has been the really big mover recently. Right, USD SEK, and then we'll finish up with USD NOK. Right, USD SEK, this has been the really volatile pair that we've been covering. Big sell-off there, and we wanted to buy strength. We thought this whole retracement, we would basically cover it and more, and we've done that. Okay, but in terms of the price action, it has been quite spiky with tails, etc. We got taken out and stopped a few times. Of the rally, we probably only got around 55, maybe 60% of it. Okay, but it is, still decent rally for us. It's about 8% overall, so we've got reasonable percentage. We're looking for more upside. Sweden, let me get rid of my header. The economy is a bit of a train wreck, which I pointed out in my previous video. So we were looking this morning for a break above the 11 level to follow through the monthly resistance 1150. You can go and check it out yourself. And then we're going to stick the stop back behind today's low. That would give 5 to 1 in terms of risk to reward. Obviously, if our view comes to fruition. Sure, it's been a big uptrend, but still plenty more upside in our view. But what has actually happened this evening? We've exhausted back. We'll just stick with our position. If anyone was coming in fresh, I think a break of 11 would be good if we get up through the level again. Or if our stop is taken and we come below 1090, I'll be looking for these candles here to provide support in the 1080 level. So you could buy off that level, stop behind 1070. You've got some support here on the bodies I'm highlighting, and also on these couple of bodies here. That's we had big blue up. So yeah, break higher, or if we go lower, pick her up, into the 1080 level on strength. What's the last pair we're going to look at? It's going to be USD NOK. It's been a little bit smoother for us. You can see our position at the top. Now, in terms of target 1120, still a good way to go. Our stop is behind the 1060 level at 1058. So, 1, 2, 3, 4. Again, it's 5 to 1 risk to reward. We've nearly retraced all of that big sell-off, and I think we'll run on to chart highs. What's going on in USD NOK tonight? USD NOK. I think our stop will probably get taken. Okay, so what we would do is we'll probably go this moment in time through 1070 and then probably a stop, but back behind the low. Okay, see if we can get up to 1120, or if we fall a bit lower, we'll pick her up on strength and have a stop behind this 20-day moving average, the 1040 level. So yeah, if we break higher, buy, comes a bit lower. If you're bullish, you're going to get a better price. Just wait for it to bottom out, hopefully, and use your stop or put your stop behind the 1040 level. So yeah, that's the European currencies. I think in the proxies, the one that we're really focused on is USD PLN. I think it was a great trade. I don't want to curse it, but I do. I think it's really good. USD NOK and USD SEK, I think they've got more upside as well. Obviously, yeah, I think the USD is looking really attractive. A lot of people are arguing against the USD going higher longer term, but it's got a really good yield in terms of interest rates. Economy's robust. European economies, they're just not looking good. And if we get big risk off in the markets, which I think could occur going forward, then the USD is going to get an additional boost. So yeah, we're sticking with our long USD stance. Jackson Hole, big event of the week on Friday. You can check the article I posted on my blog. I'll do it by midday, and we'll have a roundup of these pairs and other pairs at the weekend. I'm going to go back to doing my general weekly Forex forecast. But that is the video for now. Hope you found it useful. Take care. Have a good day.